Hi, everyone. Welcome. I'm very pleased to see that all of you are joining us here today. We're going to start with some introductions. First of all, thank you for the panelists to be here joining us. I'm Agustin Guerra, CEO and co-founder of Bangui. Bangui, we are a consulting firm focused on technology for fintech companies. We help teams design, build, and scale their platforms with a particular focus on fintech and payments. A bit about myself. I've been working in the payment space for over 10 years. I started my career at the local many years ago, where I had the opportunity to learn a lot about different markets and payment ecosystems. Something about Bangui. At Bangui, we don't just write code. I always like to say that when you work in fintech, it's more important to understand the business behind what you are doing, the flows, understand how things are working under the hood. So we work closely with our clients on strategy, architecture, integrations. We work mostly with fintechs, but we also support other companies outside the fintech space that need to build or improve their payment flows. I'm really excited to be moderating this roundtable and looking forward to hearing from our guests and the audience today. So first of all, why this conversation? Why are we talking about the new wave of investments? Over the last couple of years, the investments are changing from being something reserved for a few, something that was expensive, something difficult to access, to something that's more a necessity than a luxury. Why? Because people need to grow their savings, they need to secure their financial future, they need to prepare for retirement. And that's where fintech comes, where these platforms are making this possible for more people in more places than ever before. So that's what we're going to be discussing today, this new wave of investments. A quick note before we meet the panel. Today, Yoshi Yokokawa, CEO of Alpaca, was scheduled to join us. However, due to some unexpected travel circumstances, he won't be able to join, but we're very lucky to have with us Tony Lee, Global Head of Brokerage at Alpaca, stepping in his place. At Bangui, we are partners with Alpaca. We are official integrators of their platform. We help clients to integrate into this API-first brokerage platform that enables fintech and businesses to embed investing stocks, ETFs, and crypto into their products. So, Tony, I'll pass it to you so you can introduce yourself.
Thank you very much. Hi, I'm Tony Lee, Global Head of Brokerage here at Alpaca. And Alpaca, we are an API-first brokerage infrastructure platform. We power and partner with hundreds of fintechs around the world to offer investing, trading, and general wealth products to their end users. Our mission is to make financial services universally acceptable and accessible. We build the rails that connect people and platforms to capital markets everywhere. So prior to joining Alpaca, I've been in capital markets and financial services for over 20 years. And prior to joining Alpaca, I was at a large Canadian bank for 15 years. And my primary responsibility was servicing the largest institutions of the world to trade derivatives. Joining Alpaca was a shift away from us only servicing the large institutions and shifting that focus to servicing as many people around the world as possible.
Great, thank you very much, Tony. Moving along, we have Julieta Barros, Chief Operating Officer and Compliance Officer at Amber Latam. We are more than happy to have her here. We have been part of the team that brought Amber's platform to life. They're a wealth management platform that empowers individuals to invest smartly and in a more automatic way. Juli, great to have you with us. If you want to introduce yourself.
Hi, everyone. Thank you so much for the invitation, Bangui. It's a pleasure to be here. Well, yes, I'm Julieta Barros. I'm founder of Amber. It's the first robo-advisor based in Uruguay. We created Amber with a clear goal that was to make global investing simple and accessible for everyone here in Latam. The client defined his investor profile, opened his personal account in Interactive Brokers, and invest in a BlackRock portfolio. And Amber automatically will rebalance its portfolio to keep it aligned. So we try to combine technology, automation, and these trusted and strong partners to give people in Latam an easy and safe way to invest with full transparency and low costs.
Thank you, Julieta. It's great to have you with us. Thank you for joining. And last but not least, we are joined by Lucia Carvajales. Lucia has a very strong background in wealth management and will be able to contribute to this conversation. Lucia, do you want to introduce yourself?
Hello, everyone. Thank you so much for the invitation to be here. It's nice to be speaking on behalf of the human part of the whole investing process, which I think it's a very interesting discussion, the one that we're about to have about how these traditional and disruptive technology merge to offer better services for clients. I've been working, as you mentioned, on wealth management, supporting financial advisors, and I'm just finished my master's in finance in Cambridge, and I'm back in Uruguay, hopefully now taking over the role of advising clients. I've also been working in financial education through universities and some nonprofit organizations for the past years. So very excited to have this conversation with all of you.
Thank you, Lucia. Just a bit of an overview of how we are going to structure today's roundtable. It will last around 1 hour. First, we'll have 4 thematic blocks that they will contain the questions for each block, and then that will be followed by a short Q&A and then some closing remarks. So you'll see banners on the screen during the session to follow along with the blocks. So let's get started. First, let's start by looking at the big picture. Why is investing becoming such a central topic today? We see it on the news. We even see it on social media. If you think many years ago, investing was not everywhere, but nowadays everyone is talking about it. So why do you think access to investing is more relevant now than ever before? Tony, do you want to kick us off?
Yeah, thanks. It's a great question. I think there's a lot of different factors that are at play, particularly over the past, let's call it 10 to 15 years. There's constant growing globalization of multinational organizations that are, reaping the benefits of globalization. And so you have this entire supply chain of individuals that are involved in the benefit of these publicly traded corporations, but then they can't actually invest in those companies. So you could be an individual that might be, in the supply chain of somebody that of the creation of an iPhone, but you can't even invest in Apple stock, right? And that, in essence, is unfair. Everybody should benefit if they have the tools and capability to do so. Other factors such as, growing inflation, uncertainty around politics, and just, maybe overall gap of the rich and the poor. It increases the need for us to invest in global access and investing, and also diversify in how people can invest, and not just gamble, but to actually invest. Some of the things that we look at globally is like, if you look at the global economy, I think 90% of the global economy is supported by small businesses that don't have access to corporate accounts, that don't have access to investment services from private banking networks. And they employ approximately something around 70-75% of the world's individual employees. So I think it's really important for now more than ever for us in this group and us as a community to increase the access and make it as low cost as possible to service even the smallest investors.
Great, thank you, Tony. Yes. We have been seeing this trend that making it low cost makes it accessible for everyone, especially in this world nowadays that people need it, right? It's not just a luxury anymore. Perfect. So we can say that today investing is more of a necessity than a luxury. What do you think about the personal future? Meaning, how do you think that people are seeing this, Lucia?
Yes, I would argue that it has always been sort of a necessity. The thing is now it's not a luxury anymore, because services that used to be provided only to high net worth individuals or ultra high net worth individuals, you would need millions of dollars to open an account and get a service. Now, thanks to robo-advisor platforms and the democratization of investing, have provided access to retail investors. Now, you don't even need to have $100 in your account to be able to invest, which is amazing. Tony mentioned inflation. That's the most immediate benefit, if you want, of investing. You are saving your money in your bank account and doing nothing with it. Maybe people in the United States, Europe, have just in the past years felt the impact that inflation have in their money. In Latin America, we have known that for years. So short term, investing is the best way to protect your money from losing purchasing power. And in the long term, the changes in the demographic structure of most developed countries, I would dare to say also Latin America, and the inability of governments to provide retirement for all of us, it will only get worse with time. So it might seem a little bit too far off, especially for young people in their 20s that are just starting to work, to think about retirement. But investing gives you the tool of your present self to grant your future self to have a livelihood, mostly, especially if you're someone that can save money. You cannot expect governments down the line in 30 years to provide retirement for you. That means how are you going to pay your housing, your healthcare bills, and even if you want to leave something behind for your kids or grandkids, if you retire at 65 and your life expectancy is at 90, how are you going to survive those years? So that's when investment becomes a key factor in everyone's life, I would say.
Thank you, Lucian. You mentioned Latin America as a specific market where, of course, there are specific needs of the people that are in that market. What gaps or needs in Latin America are driving the creation of these new digital investment platforms? Julieta, I would love to hear your thoughts since you are doing exactly that.
Yes, that is a good question. I think that Latin America, the main problem nowadays is that retirement systems are very, very weak. So people discover too late that their own pension isn't enough to live on. And at the same time, the financial education is very low still. So for many years, people saw it impossible, regular people saw it impossible to invest abroad and specifically have access to a professional advice. So we have this big gap where people need to build their future, and but they don't have the knowledge or the tools to do it. So I think that nowadays technology is changing this because digital platforms can make easy to open an account with your phone and invest in global portfolios and seeing everything in real time. So Amber was created because we saw this big opportunity here in Latam, and we wanted to make that in global investing accessible for everyone and bring regular person the same quality as private banking clients have, but for everyone this time.
Very interesting. Thank you, Julieta. And now that we have set the context of what is this new wave of investments, why is it a necessity, why is it relevant for everyone and not a few, let's talk about how fintech platforms are building better and more accessible platforms with better user experience as well. So how do API-based approaches empower fintechs to build better investment experiences for end users? Tony, since Alpaca model is a great example. What's your view?
Yeah, so as I mentioned before, Alpaca is an API-first brokerage platform. Core to our philosophy is that we believe that the infrastructure should be programmable. We cannot build a platform that is a one-size-fits-all that can be utilized in LATAM, in Europe, in Southeast Asia, in Africa, right? And in order for all of these localized experiences and different use cases to be successful, we have to focus a lot on the API experience so that our partners can have the best options to create that specialized local experience. And I think it's more and more important these days because if you look at the revolution of fintechs around the world, it used to be back in the day, the traditional financial services industries and institutions, they would internalize as much as possible. They weren't open to partnering with other financial institutions, right? But now with the new fintechs, I think 80% of fintechs partner with other fintechs, right? And for us to be that infrastructure layer, we have to focus on the APIs so that the entire ecosystem can be successful. And if you look at the evolution of how financial services, started and is going, it used to be face-to-face, right? And then it went to phone, and then it went to emails, and then it went to web, it went to mobile, right? And now we're talking about LLMs and agents. And at the core of all of that is to have a very strong API infrastructure that can facilitate all of the messages that are being passed around the financial world. And so that for that reason is why, from a product perspective, we think that if you are that infrastructure layer, you have to focus on APIs. Yeah, gone are the days of daily reports, of end-of-day reports. Everything needs to be real time and on demand.
Very interesting. Yes. We have seen working with many fintechs how nowadays fintechs, they work with fintechs and they partner with fintechs, and everything is built between fintechs. So it's more of a cooperative effort than a competition in many cases. Thank you, Tony. So trust is very important when it comes to investing in money. I mean, a big part of the financial ecosystem is built on trust. Juliet, in your opinion, what makes an investor trust a platform? What goes beyond the tech itself?
For me, trust is start with transparency. In this journey, we saw that people want to know where their money is, who keeps the money, and where it's invested. So, as you already said about the partners, we had to make sure that the client has their own account in a safe place, that in this case is Interactive Brokers, and at the same time make them sure that the money is under their control and not mixed with anybody else's. And the portfolios, the money is invested in a BlackRock portfolio, so they know that it's managed this global and big firm that BlackRock is. So of course technology helps a lot with this because it makes it faster and easier and accessible, but I think the trust comes with transparency and having these good and solid and strong partners and the real control of the parts.
Very, very interesting. I want to go a bit deeper on this one, Juli. What things have you done in Amber, for example, to make the public trust the platform? What do you see as the most important things for the general public to build this trust?
Maybe regulation. People want to make sure that Amber itself, it's also regulated here, in this case in Uruguay, because we're based here. So we're regulated by the Banco Central del Uruguay. And bueno, having their personal account in Interactive, we thank you, Bang. We allowed the client to open itself its own account and have full control of their money, see it in real time, and understand and see where the money is invested.
Great. I think here we also see what Tony, you mentioned about fintechs working with fintechs, right? Using platforms to give trust to end users.
Yeah.
Great. So as we mentioned, Amber is a robo-advisor, and robo-advisors are changing the way that people invest. However, also the human role is important, right? It's not just robots doing everything. What do you think, Lucia? What's your perspective on what's the human role in investments?
I think, as I mentioned before, robo-advisors have done an amazing thing for the industry, that it's making it accessible to a lot of people that before wouldn't be able to access that. However, I have to say, we're still humans. We have a lot of biases and we do things because our emotions. And I guess we've all been at a point where we've had a conversation with a robot for any reason, and sometimes we get frustrated and we want a human to listen to us and understand what we're going through And I think that's where advisors, human advisors, come in the game. I think the way we advise is changing. I think we used to focus more on product selection, building a portfolio, and only analyzing a particular account. I think our role, if we're smart enough, it's to change from that to more of a behavioral coach, someone that holds the client hand throughout the whole process and give them certainty. There's a very interesting report by Morningstar called Mind the Gap that it says that the average investor underperforms their funds by almost 2%. And that is because of behavioral biases. So that's when we come in, we guide the client during the moments of fear, of panic, of the markets going down. March 2020 was a great example of that. How do we keep the client to stay there, not sell in the panic? And also we keep them realistic on the highs. I had a conversation actually the other day about gold. And this woman was like, no, like gold is going up, we should go there. And then giving context on, okay, gold is going up because of this reason, how this asset class work, why might be good in a proportion, but we cannot have the whole portfolio invested in gold. So kind of being the connection between the platforms, the product, and the human understanding. Financial education, it's terrible, so it's kind of being there holding their hands to avoid unnecessary mistakes that will cost them money in the long term.
Very interesting. Thank you, Lucia. Yes, I think it's the human factor is very important because behind every investment there is a person making that investment. So that's where the human plays a big role. Let's step back and look under the hood now to see how all of this is possible in the technical and regulatory space. We talk about demand and access to these platforms, but what about the technical and regulatory foundations? Tony, how has Alpaca approached this while expanding to new markets?
Yeah, so I think Julieta, I hope I pronounced that properly, but it kind of touched on the whole point about trust and working as a regulated entity and working with regulated entities. And so like technology is what we use to scale, and regulation is what we use to gain trust and to act as a stability layer for the industry. And for us at Alpaca, it's really important for us to hit on both of those axes as much as possible, in order to unlock the financial services to as many people as possible. For us to just be a technology company on itself would not be enough for us to provide the services. We need to have that regulatory framework, and we need to have that trust of not just of our partners, but of also the end customers as well. And so for those reasons, we've gone down the road of becoming self-clearing on DTCC. So we're self-custodying all of our US securities. Now we are OCC members and FICC members, so we will also self-custody all of our options and fixed income products as well. And as we expand globally, there's really two options for us. We can, partner with local regulated individuals around the world, or we can actually build local regulated entities and fold them into our brokerage infrastructure. So the way that we look at it is what is the best avenue to unlock the unit economics and the scale to really provide services for that region. If we can do it just by partnering with somebody in that region, then yes, that is a very viable option for us. But in certain regions, we look at it and we see actually for us to really unlock it, we should actually create an entity or create a broker dealer in that region. So there are several locales around the world that we are doing this. It's public, so we've acquired a broker dealer in the UK and EU. We have a broker dealer in Japan, and there's several other regions where we are looking to establish a broker dealer in order to continue to expand on that access, where we leverage our technology, but also ensure that we meet the regulatory obligations to unlock as much of those regions as possible.
Thank you, Tony. Very interesting insights. Talking about regulatory changes and licenses, Julieta, given that you've been through the process very recently of going through all the challenges that with regulations, what specific regulatory challenges do platforms face in Latin America?
I think that regulation is probably it is the biggest challenges of any digital platform in Latin America. In our case here in Uruguay, it is a big one because we have a very like old regulation. So we had to connect a very innovative product to a very traditional regulation. There were no clear rules for a product such as Amber that is 100% digital, that is connected to an international broker, that invest in global portfolios. So we had to work very closely to our legal team, but also to our regulators to be able to make them understand what Amber is, and make sure everything was clear, was safe, was transparent. I think across the region, this is a challenge, a very similar challenge also, because many laws are made for this old financial world. So I think they have like the same challenges as we did. But anyways, I think that this good regulation is not the enemy of these innovative products. It just that it hasn't caught up yet to like the technological advances that we're living right now.
Yes, I do believe that we should not see regulations as our enemies. We should work with the entities that are creating those regulations to bring them where we want them to be, so the public can access the services they need. Absolutely. So we have talked about why investing is more important nowadays more than ever. We have talked about how fintechs are making this more approachable to users. We have talked about the technical part and also the regulatory part. Let's now talk about where we're heading. What's the future? Where is this space going to? So as digital platforms and role advisors continue to grow, Lucia, how do you see human advisors evolving to complement the technology?
I think it's a very good question in the sense that personally, I haven't been in the industry that long. While I was doing my master's, I was in touch with people from all over the world that are also starting their careers. They have 5 years of experience under their belt. And we all agree that technology, AI included in the mix, it's disrupting all industries very fast and in some ways that we cannot predict. So I would say the focus we should have as advisors, it's on things where we cannot be replaced, and that's now the human capital, and having a more holistic understanding of the person. I think in the past, advisors used to take charge of one account only and analyze the risk profile of the client for that account, and not think forward or in other realms. I believe good advisors now, and especially down the line, need to see clients as a human, and all that that contains. We should have more expertise in tax regimes, international taxation. The globalization has led to people having residency in one country but having citizenship in other, and their account in a third country, multiple assets in different jurisdictions. So how that all integrates, that's a key value that we can add today. And also understanding liquidity needs. It's not the same to speak with someone that is in their 20s saving long term, speaking with someone that is 33, maybe wants to buy a house with that money in a couple of years, or speaking with someone that is thinking about estate planning, what's going to happen with all my assets, not only an account but houses, businesses once I pass away. So I think that's where we should be moving towards as advisors. And if what you enjoy it's product picking and building efficient portfolios, then I think that's better suited for a more back office role in the fintechs platforms that offer those portfolios. So I think there's more of a shift on what's the added value that we bring to the table. It used to be product picking. I don't think that's it anymore. We have technology for that. We need to be the ones understanding when to buy things, why we're buying it, and of course, in the process of it all, educating our clients so that they can still sleep when the market crashes, knowing why they are doing what they're doing and how it's going to move forward down the line. And also being that person that they can call on a Tuesday at 3 p.m. when a new Trump regulation comes out and the market crashes, and be like, okay, just breathe in, breathe out. It's going to be okay. We prepare for this, and just holding their hand. I think that's the most important thing.
Very interesting, and very interesting the point that you raised, Lucia, about globalization and tax regimes and people being a resident of different countries. I think that's something as well that we haven't seen over the last a couple of years. As people move around, they want to keep their investments, but they want to do things according to regulations. So yeah, that's a topic as well that we should be putting more attention to. As more platforms enter the space, there are more and more investment platforms appearing in all the markets. I think that markets like Latin America, where maybe 10 years ago it would have been unheard of new investment platforms that are bringing investments to clients, and that's something that nowadays is a reality. Tony, do you see more space for more room for new players? Is the market becoming too saturated? What's your take on this?
Yeah, so I think we're still on early stages in terms of fintech in the wealth space. I think that there's definitely been a lot of success with individuals who have maybe copied a business model that they've seen successful either in the US or in the UK. I think there's been a lot of new players that have come in that have just basically had the motto of just give access to buy stocks, right? And that may or may not have been successful in that region. And if they really engage the users in that region, may be very successful. But I think that there's still a lot of room to diversify how people can get access to the markets, such as, robo-advising and other types of investing strategies. And so and the fact is that the fintech market is still growing. Yes, it has slowed a little bit. I think that there was a report that says that fintechs globally are still growing their user base at over a 40% year-over-year clip, which is still a very strong indicator that that the market is still strong. But I do believe that the new entrants shouldn't just try to copy the success of other successful fintechs in other regions. They need to be thinking, how can they localize? How can they target in on a key, maybe underserviced demographic? I look at, and also in how do you incorporate new technologies into the investment strategy or the experience as well. So you look at, we see it all over the news these days in terms of the tokenization of securities and the tokenization of real world assets, right? And yeah, maybe if you rewind 10 years ago, that was just kind of like, oh, it's just for a very select few of these cryptophiles. But no, you're really seeing engagement with this new technology-based product more into real-world usage. And I think that in itself shows evidence that there's still room for new entrants to take market share, and to not just take market share, but to increase the addressable market that we all want to have access to. You look at individuals around the world, I think that there's still almost 2 billion adults around the world that have no banking services, right? There's I think that the percentage of assets that are being managed by females is growing 7% year over year as a share of the entire market. So I think specialization in the user experience there's still plenty of room to grow, and lots of opportunities for new entrants.
Very interesting. Anthony, just a follow-up on this question. Do you think that there's space for innovation, or there's space for polishing the current experiences of the platform that we have and expanding them into new markets? Where do you think that there is more space for growth?
Yeah, so I see both. I see both. Like, and so on the innovation part, like, if I want to go back to the whole idea of tokenizing real world assets, and you think, okay, well, it's just another way to buy an asset. It's just another way to buy a stock. But no, I think, yes, maybe it's starting with that, but there's so many ways that we can expand on that into the future, such as, one of the reasons why having an asset base is so important is because what does it get you? It gets you access to credit, right? And so so credit is a very regulated and very kind of administratively heavy industry. So therefore, a lot of the financial institutions traditionally have only wanted to extend credit to the richest and the biggest asset-based communities, right? I think that with the advancements of tokenization, you can break a lot of those barriers in terms of cost of extending credit. So embracing these new technologies does have room to grow, because we are now, you take everything that a more wealthier individual has access to in a private banking network. We need to figure out how the new technologies can break those barriers to allow the smallest investor to have access to the fullest breadth of investment vehicles, not just accessing and buying a fractional share of a stock, but also accessing the full breadth of the credit market out there.
Very interesting. Thank you very much, Tony, and thank you for the follow-up. Julieta, what do you see as the biggest opportunities and challenges for new platforms? Now that we are talking about innovating, we are talking about expanding to new markets, what do you see as the biggest opportunities and challenges for new platforms entering the space, also especially in Latin America?
I think Latin America is full of opportunities. There's a lot of people that want to invest but don't have the right knowledge, the right tools, the right guidance. So digital platforms can really make a difference here by making this accessible and transparent for everybody. And also that we have now a digital native generation that is starting to have their own savings, and they're used to technology. So they're starting to invest or is interested in. So I see people very like open and curious about taking control of their money and make them own future. And technology will make a difference here. As for the challenges, regulation is one, and another strong or big challenge is, I think, education and trust. I know each country here in Latam is different, but I see that people still need to learn so much about money, about investing, that they need to feel very safe before moving their money online. So I think that is like the biggest challenge we have here. But the real winners here will be the ones that are able to combine technology, but with these strong partners that make everything transparent for the client.
Very interesting. And yes, regulation always comes up as one of the biggest challenges. We're going to open it up now to questions from the audience. I see that we already have a couple of questions in the chat. So everyone, please feel free to drop a couple of questions. We have roughly 10 to 15 minutes. We're going to pick some of them. We're going to go over. Let's start with Lucas Uru. Given the new world of deglobalization and wars, which means less efficiency and more cost, should investors just expect lower long-term stock market returns now compared to the good times of the 90s to the 2020? Anyone from the panel wants to take this question?
If I may, I think it's a very good question. I think we should remember that in the 1990s, we had two big crashes. We had the dot-com bubble in the early 2000s and the 2008-2009 period, which I think what gives us, it's more of an understanding that it's a long-term game. You shouldn't be seeing stock investing for now to the next 2 years. You shouldn't be thinking of individual stocks. You should be thinking of the most diversified possible portfolio, which I think it's something that platforms like Amber, working with BlackRock portfolios, they offer. And I think it's more about not will the returns be high enough or high as they used to be in this period of time. It's what's the alternative of not being in the stock market. So if you're not invested, if you don't go through those dips that will happen, and they're happening more frequently, what's the alternative to that? What will you be doing with your money to preserve the purchasing power of it and to make it grow? So I think that it's a good question, but it should be targeted differently. There's a lot of people saying that right now stock prices, there's a bubble building. Will it burst? Will it not burst? Will it be in 1 year, 2, 3, 5 years? We don't know. At the moment, I don't think if you're thinking long-term capital growth, you have many alternatives. So I would just say diversify. Don't stay with 5 stocks because then you're assuming a lot of risk unnecessarily, and just keep adding to the plan. Long term, the world always humanity has found ways around challenges that we face, and we have reinvented ourselves, and things we never imagined would be possible became possible. So if you're invested in a global portfolio in multiple industries, you'll reap the benefits of it. Some things will fall, but new things will arise, and you'll get the gains from that.
Yeah, if I can add to one of Lucia's point in terms of what your goals should be, I think what's important is to manage your investment strategies based on your investment goals, your targets, and your expectations on inflation as well, right? So based on those factors, there's many different ways to construct an investment strategy. And in terms of kind of like the question about like whether there's expectations of lower long-term stock market returns, it really depends on your time horizon. So you mentioned a 30-year time horizon, and I think if you go back in history, if you take most 30-year investment time horizons, investing in the stock market is generally a good idea. The allocation towards it may change from period to period depending on individuals, based on the markets, based on the sectors, right? But in general, I think it's you shouldn't be worried that a potential global slowdown will deter you from investing in the stock market. It's just really how you utilize it.
Thank you, Tony. Thank you, Lucia. Here we have a comment/question from Mauro mentioning how do you go about convincing people with lower incomes, and how do you educate them for them to understand that the safe thing to do is to invest, to run a risk? So how do you go about educating these people that they should run a risk for them to be safer in the future financially?
I will go. In Amber, it is a big challenge, this. So we add to our website a retirement calculator to make the client conscious about money, and that it isn't enough, and what you really need to be able to live on a pension. And also it is a big work of educating about moving the money, and the money that is that doesn't move, it has its cost also. So it's I think that is while it's education, pure financial education, because it's true that people isn't like conscious about what you really need to be able to live on pension, and that retirement system is very weak, and it doesn't work nowadays here in Latam. So it's financial education for like our big challenge here. to convince these people.
Thank you, Julieta. Yes, Tony?
Yeah, I just want to see, just based, because we partner with a lot of financial institutions around the world, and we see a similar pattern with a lot of them who are trying to kind of open up into these new markets. And it's, and I think that this was mentioned before in the call, but just the trust and having the user experience, you know, as seamless as possible. And I think that like people coming from these regions, they may not have had great experiences with other financial institutions in the past. It takes them too much effort to deposit money, takes them too much effort to withdraw money, takes them too much effort to open up accounts. So just having that US experience in itself like breaks some of those barriers in terms of people being uneasy about it. And then we see a pattern a lot is someone will deposit a little bit of money, maybe not even put in a trade, take out a little money. They want to know that where they're sending their money that they can get back, right? So they might do that first before they actually put on their first trade. So if the first time they ever do that, there was like a hiccup or it takes a couple of days to get their money back, they may not put on that first trade, right? So having that user experience, we see that our partners focus on that as much as possible, and that user experience is what I think will break down a lot of those barriers.
Thank you, Tony. Also, I think that cost is very important. We have seen it as well with working with Latin platforms, that this process of putting the money in and taking the money out, whenever people see that they lose some money doing that, that can disrupt the trust of the users in the platforms. I see a couple of questions here regarding crypto by Wes and by Mauro. Do you see crypto as a way to diversify globally, since it's an option that's open to so many regions and countries?
In the role of financial advisory, I would say take it as your bet. You should, and I personally say you should always invest in things that you understand how they're generating value. The whole reason of cryptocurrencies existing, it's valid, but it's not an asset. It's not a business that it's selling a product or a service that it has demand. It's not a loan that you're giving to a government to build a road that is going to, have payments throughout it, or a hospital that's going to generate money to repay you. It's speculation, at least for now. It's more people want the asset, it'll go up in price. Less people want it, it'll go down in price. If you want to bet to the fact that more people down the line will want that asset, great. Make it that be an amount in your portfolio that if it goes down significantly at 60%, you can still sleep at night. It will not put in jeopardy your lifestyle or you paying this expected bill. I'm a firm believer that you should need to understand how any asset where you're putting money, where the value derives from, and is that value something that you can keep up in the future. And as financial markets get more complex and investors have more access to investment strategies that maybe they didn't have down the line, and I'm not talking about equities and bonds, I'm speaking about private credit, private equity, being putting money on VC. Of course, that's an option for bigger capital holders. It's not for small investors. But I think the key anytime that you're investing is asking yourself, do I understand how this asset generates value? Do I understand where the cash flows are coming from? And do I understand the risks that it can face down the line? And can I accept the worst case scenario of this asset? I think that would be, it's not very maybe cool in the online sphere, but I think it's the most realistic approach.
Yes, I think a very good advice is invest in what you understand, right? That's the best advice for most people. We see here a question by Lucia. With AI becoming more integrated, where do you see the limit between automated advice and human responsibility? Anyone that wants to take the question? Or maybe the question, we can rephrase it as, where is the limit between technology and advice from a person? Where do we draw that line?
I'll just maybe my colleagues here will have a little bit more insight since they're kind of more directly in this space than I am. And but you know, the way I see it is that, you know, regardless if it's an AI agent or an AI bot or a human being, you know, I think that everything needs to be have the foundation of an investment plan, right? So whether that's being created by a human and then fed into an agent, or whether it's being created by an agent but being fed with information, everything needs to be kind of framed with the plan. So if you're talking to an AI agent about an investment plan, you should understand, okay, what is the basis of the information that this agent is providing these investment strategies. And I think that if, as long as you know, a strong investment plan is outlined and can be matched towards the investment strategy and the risk tolerance of the individual, I don't believe that a human will deliver that better than a machine can, as long as the training is there, right? On both aspects, both for the human and for the agent. So.
I'm going to pop in here for a second. I do think the thing that so far AI doesn't have is fiduciary duty, and we as advisors have it. We're heavily regulated by central banks throughout the world. So I think that's where the advisory part, when it comes to more targeted plans, maybe I wouldn't speak about portfolios that are built pre-established and then you're assigned to one based on your risk profile. I don't mean that. I mean when you're doing something more tailored to the person. I think AI can be a tool, but you should have a human just go over it and then take the responsibility of that plan. Because then if it doesn't work, who are you going to speak with to understand why it's not working, or why did we do what we do? It's just, oh, AI said it. I think it's a good tool. It's a good first approach, but the human layer, especially for very tailored plans, it's still very much needed.
Yes, sorry, a comment. Amber is not working with AI, but yes, with automatization, and I see this that is like a partnership where the technical side can help the human, the advisor, on being more precise, on being more efficiency, like to improve efficiency, but it is very important to have like a human at the end of the day to take care of like the psychological or emotional part of the client.
Thank you, Tony, Lucia, Julieta. We're going to be closing the Q&A, given that we have 5 minutes left for the slot. Again, thank you again to everyone who joined us today. Thank you for dedicating some of your time to us. And of course, thank you to our panelists that also took time to give us these very thoughtful insights on investments. So we have explored how investment is not longer just for a few privileged people. It's for everyone. It's how this paradigm is shifting to making investing accessible to everyone. Again, Tony, Lucia, Julieta, thank you for your time and insights. Thank you everyone for watching. Please feel free to connect on LinkedIn. You can drop us a message also to any of the panelists in case you have any questions after the session. And enjoy the rest of your day.
Thank you for having us.
Bye, thank you.
Bye, thank you.
Thank you.